Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, September 16th, 2019. First day of the trading week, and we find ourselves again in the final hour of the trading day. As I mention each day, in my opinion, the closing prices of the day are the most valid prices of the day, and therefore those are the prices that I prefer to make my buying and selling decisions from. The reason I believe that is because during the day you have a lot of algorithms, you have a lot of day traders that are moving the market around, moving the market prices around. At the end of the day, you have the market makers, you have the large financial institutions come in and take control of the prices, and I believe that they're the best informed, they have the best research, they're the smartest guys in the room, and so I like to hitch my wagon to them. So that is why I wait till the end of the day to make the majority of my buying and selling decisions. So, all right. Well, first of all, I want to thank everybody for coming by today. I appreciate you coming and investing your time with me. I hope that by watching this channel, you're learning something and it's improving your trading and that you're getting a return on your time investment. That's why I started the channel. I wanted to share what I've learned over the last 24 years as a full-time trader and money manager. So let me just make sure that everything's working. If you guys can hear me, if you could just say hi or something in the chat just to make sure we're good. The market, we're having another bit of a wild one today. Over the weekend, there was a drone attack on some Saudi oil fields. And that has caused a huge spike in crude oil and, the possibilities of some kind of military conflict with Iran, which, that's of course going to add some volatility to the market. So the Dow's down 126 points, the NASDAQ is down 22, and the S&P is down 9.3%. So it's a red day across the indexes. I am fortunate to have some green today, which is nice on a day like today. So grateful for that. Let's take a look. Hey, Workhorse, how you doing, man? Workhorse Fitness and Training says all good, loud and clear. Good to hear that, and it's great to see you, Workhorse. Always good to see you. I hope business is going down there and that you're getting some good clients with your fitness and you're improving their life. So it's great to see you. Anthony Rizzo, hey buddy, what's going on? Come through loud and clear. Hope you had an awesome weekend and I'm looking forward to our lesson later. I am too. I was thinking this weekend what I was going to teach you tonight. So I will see you tonight on Skype, 6:30 p.m. Mountain Time, and I look forward to that. Roy B, sounds good. Hey Roy, how you doing? Good to see you. Thank you so much for coming by. All right, so the plan for today, as usual, first of all, we're going to go ahead and run the U.S. legal disclaimer. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to do a few minutes on trader psychology. I also mention this each day, but guys, listen to me when I say this. Trader psychology is the most important part of your trading game. It's the skill that you really need to learn and master. Everyone always thinks it's all about the technicals, support and resistance levels, finding the setups, and that's true. It is, but in the long run, it's your emotions and how you manage your positions and how you position size going forward. That is going to determine whether or not you're a long-term profitable trader or if you're not going to be a profitable trader. So, think about the psychology, think about your discipline, following your plan as a skill. Right? Just don't think about the setups. Think about the process. Think about following the process and resisting urges of getting out too early or getting in too early or taking too large position sizes. So if you think about it in that context, if you think about it as this is a skill, and if you find yourself wavering, go, okay, my skill's not sharp enough, bring it back into focus, stick with the plan, and develop that skill. So we're going to talk a little bit more about that after we're done. Then we're going to go through each stock in my watch list. We're going to take a look at the support and resistance levels, technical levels, and we're going to see if we can find a setup for today. I look at each indicator, indicators like MACD, RSI, moving averages, ATR channels, V1, V2 triggers. I look at all these indications as groups of buyers. I do not look at them as lines on my chart. I look at them as groups of potential buyers. So if I have a chart that has 2 or 3 or maybe even 4 indicators lining up, I look at that as 2, 3, or 4 groups of buyers going up. And it's very simple. If you want a stock to go up, if you're long, you want to be in the company of other buyers. So why not wait till you have indicators that have a combination, have a confluence, come together, so that you're in a group of much larger buyers than maybe just one set of buyers, right? So we're going to go through each stock. We're going to look for a confluence of signals. If we find, we'll go through. We'll if they look decent on our first draft, we'll mark them down, and then at the very end of the market, we'll go through them with a little bit more of a fine-tooth comb, and we'll see if I want to take a position in any of these. So, one important part, even if you find something great today, like a technology stock, if you have 2 or 3 positions already, you may want to pass on that, even if it's a great setup, because correlation is very important. You don't want to have too many of the same type of stock or this kind of stocks that are in the same industry, because then you're just doubling, tripling, quadrupling your position size, and that is not part of a good trading plan. And then after the market closes, if anybody has any questions whatsoever about anything I discussed today, you need clarification, please let me know. Don't be shy. Just type it into the chat. I'm happy to answer it. Sometimes I explain things. I feel like I'm explaining them. I understand them, but you may not. So don't be shy, right? If you're having any other trading challenges or issues that you're going through, if you feel comfortable, share them, and then we'll talk about them. So that is the plan for today. JT says, hey, Greg, I switched over to Schwab. They are giving me 500 free trades for the next 2 years. Man, that's awesome. That's really good, JT. Good for you. So that's 0 commissions for 500 trades. That's wonderful. That's a big savings. That's, what is that? That's like $2,500 worth of free trades. So congratulations, JT. And it's good seeing you, and thank you for coming by. So, all right, so that's the plan for today. I'm going to go ahead and run the U.S. legal disclaimer, and I will be back in 40 seconds. So hang tight, please. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. So let's go through my positions. I'm still having the issue with Trade Navigator. It's a real bummer. I spoke with them on the phone again today. They say they're working on it. Of course, they're getting calls all day long. I feel bad for them, but it is pretty inconvenient. I've been working with them for about 20 years. There's been 2 issues, still pretty good. I'm so used to this charting platform that going off onto other platforms, I feel like really lost in the woods. But I do for today, I do have other charting platforms up here that are working. But anyway, let's go through. We'll take a look. This particular bar does not have today's action on it. I'll show you that in just a second. But I did buy DDM back here on the 26th of August. The previous day we closed under the 200. On the day that I bought it, we closed above the 200. That's a good quantified, profitable, back-tested approach on trading DDM. Staying in DDM when it is above the 200-day, getting out, going to cash when it's under the 200-day. So this is a completely mechanical approach. I have no discretion in this trade. I just stay in it, phase out on the way up until I'm out of shares, or I get out when we go under the 200-day. And the reason these approaches work is that if you're wrong small. If you're right, you have the potential of a big win, and this is exactly what happened here. You can see we bought it down here at 45.75. It's moved up. I've been phasing out. Let's take a look here. This is the real-time chart. Not as clean as my other chart, but JT, this is Schwab as well. But you can see it's down today. We bought it here, but you can see it still had a really nice move up. If this was a discretionary trade, I would be getting out today. There's no doubt about it. But this is a mechanical trade. I'm going to continue to stay in as long as over 200, continue to phase out, or if I have to, I'll ride it all the way back down to the 200 because I'm trading this discretionarily. Hey, Steve Burns, how you doing? Good to see you, Steve. Thank you for coming by. Always an honor, my friend. Steve says ERX, unbelievable today. Yeah, the oils, I think they had the biggest day of the year. Look at that. Boom. Look at this volume. Boom. So, yeah, we didn't have any positions in oil, unfortunately, but of course this was a news event that came out. Didn't know it's going to happen. Hey, Murat, how you doing? Good to see you, buddy. Thank you for coming. Murat is our friend from Norway. So anyway, that is the DDM. There's nothing to do here. This is on autopilot. Continue to phase out to the upside till I'm out of shares. Get out when we're underneath the 200. I've gotten out of about 70% of this trade on the way up here. So if we do have a move down, it will be on fewer shares. Google, luckily Google chart is working today because it's not part of the New York Stock Exchange. I did buy Google here on the 10th of September when we had the 10 SMA cross over the 50 SMA. This is a stock, so this is not a discretionary, or this is not a mechanical trade for me. I switched it into a discretionary trade. Now, the back test for this is just buying and holding this as long as the 10 is above the 50. Going through earnings, all that. I don't like to trade through earnings, so what I do is I use the 1050 SMA as my entry trigger into the stock, but then I switch over to a discretionary model after that. So again, bought it here, has moved up nicely, had some nice phase outs on the way up out of about 30%. My plan today was to get out if we close below Friday's low. Friday's low is 1227.08. You can see earlier in the day we were below that. Now we have cleared it, and as long as this stays above yesterday's close, I will continue to hold this position. On the way up here, if we get up here to the 70 RSI, reject it, I will go ahead, lock in profits. Then if we go up, test this previous high, reject that, that will also be a red flag, and I will go ahead and lock in profits. If we have some type of movement, bad price action, some type of volatility picking up, like with the reversal that goes above and below the third ATR channel, that also may be a red flag and for me to lock in profits. So that is the plan on Google. All right, the Qs. So this is another mechanical approach on this index. It's totally mechanical. It's paint by numbers. It's a robot trade. I bought this when the 5 EMA crossed over the 20 EMA. I bought it back here on the 4th of September. You can see it's moved up nicely since then. We have phased out as it's moved up on these big days. We phased out, I think, a couple here, one there. Last couple days it's gone down. And let me show you on Oh, no, no. This chart is working. Sorry, I'll tell you what, switching back between these charts and the charts I'm not used to. Just, I feel a little lost, so hang with me. But yeah, this is today's date. So this is a mechanical trade. Again, with the 5 still being over the 20, the 5 EMA being over the 20 EMA, I will stay in this trade unless to the upside I phase out until I'm out of shares, or to the downside until the 5 crosses back below the 20. And, you know, I like to have a combination of trades. I like to have discretionary trades. I like to have mechanical trades. Sometimes you'll have a discretionary trade. You'll have one bad day against you. It will get you out, and then it will turn right back around and you won't be in it. So that's why I like to spread out my trading approaches, you know, selling options, overnight SPY trade, mechanical approaches, and discretionary approaches, just to round everything out, smooth everything out. So anyway, it's still been a profitable trade, a couple days down. But again, with phasing, we phased out at some higher levels. So nothing to do on the Qs here until the 5 crosses back below the 20 EMA, or I phase out and run out of shares to the upside. All right, the world famous S&P overnight trade. Let's take a look here. So this is a trade that I buy every day at the end of the day, and I sell it first thing in the morning. It has nothing to do with technicals. It has nothing to do with levels. And you might ask yourself, why would you do such a crazy thing? And I know on the surface it does sound crazy, but this is based on a long-term back test from Lizanne Saunders at Bespoke Invest on Twitter. You have 2 options here. First option is you can buy the SPY each morning at the open. You can sell it at the close every day. So you buy it in the morning, sell it at the close, buy in the morning, sell in the close. If you took this approach from 1993, buy in the morning, sell in the afternoon, since 1993, you would have actually returned a negative 13.9%. But if you do the opposite, which is what I do every day, I buy the SPY at the close, sell it the next morning at the open. Buy at the close, sell it next morning at the open. Since 1993, if you would have used this approach, you'd have actually returned 634.2%. And so what that means is that since 1993, all the gains in the S&P have literally come from people bidding it up in the after hours, bidding it up in the pre-market session, and selling it into the open. So the clear edge is holding the S&P overnight. And I really like this chart for a number of reasons. One, it shows clearly that the buy in the afternoon, sell in the morning is clearly superior than the buying in the morning, selling in the afternoon, which is the orange line. But you can see this does have an edge. At least it has an edge since it started up until now. But what I really also like about this chart is that, you know, with any edge that you have over the long run, it will play out, or it should play out. But in between, there's ups and downs. So just because you start using a method and it doesn't work right away, it really doesn't mean anything. It doesn't mean it's not a good approach. It just means that at that particular time, it's having a bit of a drawdown. And you can see, even though this has continually gone up and up and up and up and up, and it has an edge over the long run, in the short run, there's always dips. You know, if I would have started here, gotten out here, said, oh, this is the worst trading approach ever, and just stopped, or if I used too much of my capital here and ran right into this, I would have stopped using it, and I would have not been able to participate in the edge when it played out. So, you know, always remember that. Even if you're not doing well, even if you're having a drawdown, it doesn't mean that your approach doesn't work. It just means in that particular moment, even though you have an edge, you know, you're having some just normal randomness up and down. So I did buy the S&P on Friday, on the 12th of September. I bought it here at 301.09, and this chart is not showing today's move down, but I did sell it today at 299.80. So I did take a loss over the weekend on this trade, but that's fine. That's just how it goes. You know, you never know. We might have 10 days, 20 days, 30 days in a row of a loss. You have no idea, but I'm playing this for the long term. That's why I position size small, so that any fluctuations up or down doesn't get me too excited, doesn't have too much of an effect on my account. So I will be buying the SPY again today. Let me show you real quick. All right. So here's the real time. Whoa. Not used to these charts. Yeah, I bought it there on Friday at the close, and it is slightly higher than where it closed. So, all right. So that is that. All right, SQ. I did buy SQ, and it's not showing today's date, but I'll switch chart. But I did buy SQ back here on the 13th of September. That was Friday. I bought it for three reasons, basically. First reason, we had a beautiful V1. Here is day one. Day two, washed out day one, or went below day one, close back above day one's close. That's a really nice V1 setup. We also pegged the third ATR channel intraday before we reverse back up. And in addition to that, big picture context of this chart, we have a low, we have a rally, we make a lower low. See how deep the bars are here? See how strong the momentum is here? Then we rally, we drift back down, make a lower low, but even though we're lower than this previous low, see how we don't even have any red bars? This is called a double bottom with a bullish divergence. I learned this from studying one-on-one with Dr. Alexander Elder. This is one of his very favorite technical trading approaches, double bottom with a bullish divergence. So big picture, double bottom, bullish divergence. We went under the 30 RSI, back over the 30 RSI. We pegged the third ATR channel, closed back above, and we had a V1. So all in all, good setup. It was under the 200-day. When anything's under the 200-day, I do take a 1/2 position. This has been a nice trade for us today, and I'll show you why. All right, here's the chart that works. So we did buy here, right here on Friday at the blue line, and you can see opened up lower, but now we're higher. So this looks pretty nice right now. It's a really nice V. We are at a 37.08 RSI, so that's good. We've continued to move up when we were under 30, back over 30. I will be targeting the 50 RSI as my profit target. Probably put it somewhere right up about here in addition to this previous high. So that will be my profit target right there. It will be the 50 RSI. We did hit one profit target today right here, which is nice. So we did take some shares off the table. I took about 15% of the shares off the table and locked them in. So anyway, this has been a really nice trade, and we'll see how this goes. Moving forward to the downside, a loss of today's low or a loss of the 30 RSI would be my stop out. And like I said, I am targeting the 50 RSI probably right up about here. All right, then our final position is SSO. I did buy SSO back here on the 6th of September. I bought this based upon the 10 EMA crossing over the 50 EMA. This is a good long-term back-tested approach to trading SSO. SSO is the double leverage SPY. So that being said, because it's double leveraged, I only took a 1/2 position, and because we were so high above the 1 ATR channel up here, not only did I take a 1/2 position, I took a 1/4 position. This is a mechanical trade. I'm going to stay with this as long as the 10 stays over the 50, but because of where it happened in the value zone, it happened above value, I decided to only take a 1/2 position. So I took a 1/2 position because it's double leveraged, and then I took 1/2 of that because I did not like where it happened. But this is another mechanical trade. I'm staying in this as long as the 10 is above the 50. If it continues to move up, I will scale out. I have already scaled out in some profitable positions. We entered here, so we're still profitable on the trade, but this is another robot trade. So we'll stay in this as long as the 10 is above the 50. All right. Hey, Frederick, good to see you, buddy. Nice to see you. Thank you for coming by. I hope everything's going well over in France. Steve said, "This is great, Jay, on the free trades. Merrill Lynch gives me 1,200 free trades a year due to my deposit size." Man, that's pretty sweet, Steve. That's pretty sweet. 1,200 free trades. Wow. Murat says, "This is amazing. 1,200 free trades a year, even 500 is great. I've never heard such a thing in Scandinavia. Even if you are a heavy trader, the best deal I could find was 0.035%. Wow." Murat says, "Probably Frederick is paying €5 for each trade. It might be even more expensive in France." I'll bet. I'll bet. Murat says, "If I trade in Paris, it's minimum €9. Holy smokes." Murat says, "You moved into SQ without sideways move." Well, I didn't need a sideways move necessarily on this trade, Murat, because it wasn't a return to value trade. It was a under 30 back over 30 trade, and we had the double bottom with the divergence. So yes, you're right, but it's not that kind of trade. I mean, it is a V1, which is nice. It would have been better if there was sideways movement, but we went under the 30, back over the 30. And generally, when you go under the 30, back over the 30, sometimes it's enough for me to take a trade, right? But what I also liked is we went under 30, back over 30, and had the V1 at the same time. And we had the big picture context of the double bottom with the bullish divergence. So I hope that makes sense, Murat. But if it were just a normal return to value trade where we went up, came back into the value zone, moved sideways, looked for a V1, I understand what you're saying. But this was a deep dip buy that had several signals: under 30, over 30. Cherry on top is that we had a V1 tag the third ATR channel and double bottom with the bullish divergence. So that's why I took the trade. All right. So listen, as many of you know, I like to do a little bit during the live stream each day about trader psychology. It's the most important skill you can learn in trading. It's going to determine whether or not you're a long-term successful trader or not. Buying and selling, your technicals, this is important. Your setups are important, but your psychology, your mindset is going to determine how that trade plays out after you take it, after you have the setup, whether you get out too early, whether you get out too late, if it goes against you, if you stay in it. So this is from our friend Thomas Payne at Trader T Payne on Twitter. He has such a great Twitter channel. I really would suggest that you go and subscribe to him on Twitter, read his postings every day. Hopefully, if you read them every day, you'll start to internalize them. You'll start to, involve them in your trading, incorporate them in your trading. But Thomas says, "We have all been there before. We make a mistake many times and promise ourselves we will never do it again, like a New Year's resolution, and it happens again. Motivation comes and goes. Habits run on autopilot even when motivation fades. Create habits, not wishes." And guys, this is so true. You can get pumped up and have motivation and say, okay, I'm not going to make that mistake again. I mean, we've all made the mistakes, right? Okay, I'm only going to do this one time, and after that, I'm going to trade correctly, right? I have about 103,000 times. Okay, just this one time till I get this position back to even. I mean, it's hard for me to even say it because this is what I used to do, and I don't do that anymore, and my results are a lot better. But what Thomas is saying here is that you have to create a habit, and the only way you're going to create a habit is to do something correctly, trade the correct way over a period of time. I think science says you need 28 days for something to really become a habit. So I really suggest that you make a challenge to yourself and say, look, I'm going to trade perfectly, whatever your perfect way is. You know what your rules are, but trade perfectly Don't let your emotions get the best of you. Trade your plan. And if you do it properly and correctly each day, every single day more that you do it, the more it becomes a habit, right? And you can rely on habits. Habits will get you through. Motivation is temporary, right? Motivation is temporary. So I hope this makes sense, the difference, right? You can have motivation to trade well for a day or two or three, but if you break the cycle, then you're not creating the habit. So, I really challenge you guys, try to trade correctly, whatever correctly is for you, position size, getting in, getting out where you're supposed to. Do it day after day after day after day and create the habit, and the habit will get you through and will make you trade well. It's just like going to the gym. If I go to the gym once every week or 2 weeks, it's not a habit. If I go to the gym every single day, then I just have to go. It's just part of my habit. So trade correctly. Do it every day until it becomes a habit so you can rely on that. So thank you, Thomas. Appreciate that. And when I read this, it really did speak to me, because it's a huge part. I mean, that my trading habit every day, if I go against it, I just feel wrong. You know what I mean? I just know something's wrong because I'm trying to do something that's not my habit. You have to have a good habit too. Can't smoke every day, and then that's going to be a habit also, right? So, all right. Thank you very much, Thomas. Okay. So let's see how we're doing here. All right. So, unfortunately, with my charts here, I'm going to have to use my other charts. I don't like them as much, but I guess we've got to do what we've got to do, right? I really hope Trade Navigator gets up and running here in the next couple days. All right, we'll go through my regular watch list, but with different charts. Apple is up today. Did hit the third ATR channel, did reject the 70 RSI. Was excellent place to take profits. Nothing here. I'm waiting for Apple to pull back into the value zone, like Murat said. Now I want it to pull back into the value zone. I want it to move sideways and look for a V1 or a V2. So that's different than me buying Apple way down here on a dip. I don't need it to move sideways there. I would need it to go under the 200, back over, maybe under the 30 RSI, back over. So nothing on Apple today. Adobe is having a nice day today. It's having a bullish engulfing bar. Problem is, Adobe has earnings tomorrow, so I cannot get in front of that. But this is a nice V1 back in the value zone, bullish engulfing bar. We did have a double bottom with the divergence. See the low here, so we rallied. See, we made a lower low. See how deep the MACD momentum bars are here. See how shallow they are here. I would take this trade if it wasn't for earnings tomorrow, but I can't do it. It's part of my habit, right? It's my habit. I can't do it. All right, so AGQ is silver. We are close to a proper 5 EMA, 20 EMA crossover. Currently right now, the 5 EMA is 32.92. The 20 EMA is 32.99. So it's just not there yet. Possibly tomorrow. But I will watch this at the end of the day to see if we do get some crossover towards the end of the day. You can see the light blue is the 5, the dark blue is the 20. It was well above, went under. Now it's very, very close, but it is not a crossover yet. So we'll continue to watch that. AMD is moving sidewards here. Is in the value zone, is above a 50 RSI, has moved over this group of moving averages here, but it is kind of range bound, so I'm just going to go ahead and pass on AMD. Amazon's getting a little whooped up on today. We are back in the value zone. This is good. Check list number 1. We're back in the value zone. Now I need this to move sidewards. Then I need a V1, V2. I need to move down, move back up, proper trigger. That's where I would get back long Amazon. I did buy Amazon back here on the 26th of August. Previous day we closed below, then it closed above. My stop would have been a close below the 200-day, but it did not. It tested it intraday a couple days, moved up nicely. I phased out, phased out, phased out, phased out, phased out, phased out, and I exited here. So that was a really, really nice trade, but nothing on Amazon today. Boeing is just too high. It's up there near the third ATR channel. It is a 6413 RSI, so it's just too high. What I'd really like to see on Boeing is I'd like to see it come back down into the value zone. See how the 200 is right in the middle of the value zone? So a test of this 200, maybe under, back over, or intraday, under, back over, and a V1 would be excellent. But right now it's just a little too high. Alibaba, nothing on Alibaba today. Coming back into the value zone, which is good. But again, I needed to stop going down. I need the bars to narrow. I need to see it stop going down. I need to see it move sideways. Look for a V1, V2 back up. So nothing there. Caterpillar up at the third ATR channel over the 200-day moving average. Nothing I can do with that. DBC, whoa. Look at that, everybody. That's a big day, 4.64%. That's the commodity index, and of course, oil is a large component of this, and that is why that is up so high today. So, you know, big gap above the 200-day, right at the third ATR channel. You know, if you're dying to get in this, you could buy this and use a close below today's low. I'm choosing not to do that just because my filters of how I get into trades just shows me that's a little too high. Could go up, I don't know, but DDM we bought this back here with the close under, close back over the 200. We've scaled out all the way up to there. If this was a discretionary trade, I would be getting out here today with the close under the previous day's low, but I elected to treat this as a mechanical trade, so I'm not going to do anything with it. Disney having a down day today. In order for me to get involved with Disney here, I'd have to have a 1050 crossover. That would be a good approach if we move to the upside. To the downside, I would be looking for a under 30 back over 30 RSI entry. So it's either going to have to go up more or down more, but to me, under 30 back over 30 would be more ideal for me, but nothing on Disney today. Etsy's continuing to go up. Unbelievable. I missed this trade. I got in here when we went under the 30 back, or I got in here. Next day, got in, luckily a half position. Next day dumped on me, closed under 30. I got out. And then I didn't take this trade. You know, Steve, if you're listening, I was listening to your weekly newsletter last night, and you know, I think we were two peas in a pod because this was the signal, went under 30, back over 30, and for some reason I just wasn't feeling it. I just wasn't feeling it, probably because I had a couple losing trades on Etsy, and you know, that's just human nature. But you know, I decided that wasn't the one, and it was the one. So what you said was important. You know, if you have a valid signal and it hasn't worked the last couple times, probably go ahead and take the signal, right? Because it looks like we both missed out on this trade, even though we had a clear signal under 30 back over 30. So anyway, that's how it goes. So nothing here on Etsy today. Let me check something real quick. Yeah. Okay. Ford. We are back into the value zone. We're back between the green, this top green line and the bottom green line. Um, if we can close under the 200, back over, get a V1, and have it happen over, and then close back over the 200, that would also be excellent. But nothing on Ford today. I don't see anything. Facebook continuing to go down. Looks like we lost the 50 RSI on Facebook. I would be to the downside. I would look for a 30 RSI deep dip buy under 30 back over 30. To the upside, I would look for a 1050 EMA cross. So nothing on Facebook at this moment. Or if we continue down here, move sidewards, look for a V1 or V2. That would also be a potential signal. Okay, five. Moved up nicely, rejected the third ATR channel just like it did over here. Like with a lot of these guys, we were overvalued. We had that big run up. I'm waiting for it to come back into value and look for some kind of entry within in the value zone, V1 or V2. Gold is having a pretty strong day today. The signal on gold that I want to take is I want to take the 5 crossing back over the 20 EMA. I just showed you that on silver. Silver is a lot closer. Gold certainly doesn't look like it's going to make this today. We did gap up today, but we are lower than the open, which isn't going to affect anything that I'm doing here today. I just wanted to point that out. But I would take another long position in gold if the 5 EMA crosses over the 20 EMA. That's a good back-tested approach. I would use that as a mechanical approach. Google, we talked about Google. Yeah, so we bought that on the 10th. Yeah, so we bought this right here. It's moved up nicely for us, but I am eyeing the low of Friday's close, which was about 1227.08. So if we close below 1227.08 today, I'm going to go ahead, just lock in the profits on Google, just lock those in. So we'll see what happens. Right now it's 1231.18. Goldman Sachs had a nice move up. Again, did find some issues up there at the third ATR channel. It's just too high for me to buy here. I'm looking for a pullback into value. Intel, same thing. Move too high, move too fast, waiting for it to pull back into value again. I like that we have the 200-day moving average right in the thick of the value zone here. So some kind of move into value, moving sidewards, V1, V2, or even a close under back over the 200 might be interesting. IWM is actually up today. Let me take a look real quick at something. Yeah, it looks like we have the 1050 cross today on IWM. This is a good back-tested approach to trading IWM. On this chart, it didn't show that it's crossed, but it has crossed now. But I am not going to buy this, guys, and I'll tell you why. 1, 2, 3, 4. We're at the 4th ATR channel. Now, if you just wanted to trade this black and white, yes, you would enter this trade because you have the crossover, but I'm just not going to do it. You've seen me do this on a lot of other trades. Sometimes I'll take a half position or a quarter position, but this is just too high for me to buy here. So I'm going to pass. I'm going to pass on this crossover because of how high the price is and where it's located. All right, so IBB, I can show you this on the other chart. Uh-oh. IBB did have a legitimate crossover today. It had the 5 crossing over the 30 EMA. It's in the value zone. It's a legitimate trade. It's close to the 1 ATR channel. It's under the 200-day. So, but this is a legitimate trade. I am going to go ahead today and buy a 1/2 position of IBB based upon the 5 crossing over the 30 EMA. It's a valid back-tested approach. Let me just show you real quick. Here's the back test from 2000, 5 EMA crossing over the 30 EMA. You can see 220.4% return, not quite as good as buy and hold, but pretty close. But the drawdown was only 28.9% compared to 62.8%. It has a winning percentage of 38.3%, but the window loss is pretty good. It's over 2 to 1. So I will be buying this today at the end of the day. But again, because we're under the 200-day, because we're right there at the 1 ATR channel, I will buy a 1/2 of position. How are we doing on time? Oh, I better hustle. Johnson & Johnson, nothing there. Coca-Cola, nothing there. Sorry, I'm running low on time. Lockheed Martin's up today, is not surprising, with potential of a military conflict too high. MasterCard is in the value zone, moving sideways. If I could get a valid V1 or V2 here, I would buy it. MO down again today, 1.7%. They're having problems with the Juul e-cigarette issues here in America. Merck, nothing there. Microsoft just stuck right dab in the middle of the value zone. Honestly, I'd like to see the price go under and back over the 1 ATR channel and have a V1 at the same time and wash out this previous low. So nothing on Microsoft. Netflix is hanging in there, but nothing there. Nike flirting with the value zone, but nothing there. Philip Morris, you know, we had this move down. Now we've come up. If we can get a V1 or a V2 here in the next few days, like tomorrow, we could literally have a valid V2, higher low valid V2. That would be good, especially if it closed back in the value zone. So nothing on Philip Morris, but it's something I'm going to watch tomorrow for sure. PayPal, nothing on PayPal. Qs we have. Snap, nothing going on with Snap. SPY, we're going to buy that at the end of the day. Square we bought that under 30 back over 30. Nice V1 double bottom with the bullish divergence. So this has been a nice trade. Looks like MACD is going positive today, so we'll just follow that one. SSO, we have that mechanical trade. TLT, our bonds, they are up a little today. I'm waiting for a 30 RSI 100-day moving average convergence right about here. That's where I would be interested in buying TLT. Tesla, nothing there. It's above the value zone, made a higher high, looking for it to come back into value. Look for a V1 or a V2. All right, so Twitter is interesting here today in the fact we made a lower high, but then we washed out the previous low. It is a V1. It is above the 50 RSI. It looks like it's closing above the 20-day EMA, but the problem is, see the washout? Today did go lower than Friday's low. It did. But my criteria is it has to go a quarter of an ATR. This is a full ATR. From here to here is a half ATR. From here to here is about a quarter, but this did not even get close to washing this out by a quarter. So being that I already have the Qs, being that I already have Amazon and Square, I'm going to pass on Twitter because the V1 is not very legitimate. I mean, it is a V1, but not a great V1. So I'm going to pass on Square, but everything looks pretty good. I mean, we moved up, we moved sideways. but I wouldn't call this a spike down. We barely took out Friday's low. So if I didn't have the other positions, I might consider taking a half or something, but I already have some other tech positions, so I'm going to let this one go. UNG, natural gas, bumping up right against the 200-day, so nothing there. UNH, just moving sideways, nothing there. Here's the big chart of the day. Oil has come off of its low. It's up a mere 12% today. Boy, I'd hate to have sold naked calls on this or have been short on this. That would have been brutal. Too high for me to buy there at the moment. UUP is the dollar. Nothing there. The VIX up today, not surprising whatsoever. The VIX is currently at a 40.65 RSI. You know, I may get interested in buying the VIX again if we can get down here around the 30 RSI and this previous support. This is a trade that I took here as one of the biggest ones of the year for us up to there. But nothing on VIX. Verizon. Oh, William shorted Verizon. So I don't know if he's on today, but he shorted it on Friday. We lost the 70 RSI. We closed below the previous day's low. We had a V2 to the downside. We rejected the third ATR channel. So good call on that. Walmart. Back into the value zone, but we need to see it settle down. XLE is going to be up big. Nothing there. XLF. Nothing there. We did buy XLF back here with the close under, back over the 200, and scaled out, scaled out, scaled out, scaled out, scaled out. And I actually got out of that Friday right there at the top. So that was a really nice trade, down a little bit today. So nothing on that. XLE. Working on a V2. Here's day one, here's day two. Day three, we need to close above day one's close, but nothing quite there yet. How we doing? 8 minutes. XLU, nothing there. XLV, back into the value zone, but we need it to stop going down. We need to see some sidewards movement. We need to see an attempt to the downside, reversal back up, so nothing there. And XPH, pharmaceuticals, nothing there. So the only thing that I see today, potential, is AGQ. I don't know if we're going to have the crossover yet, though. I kind of doubt it. Where are we at? 32.90, 32.99. So we'll watch this with the 520 EMA. It is a double. This is double leverage silver, so I would take a half position, which is like a full position, but it's happening smack dab in the middle of the value zone. So I would take a full position on this, but I don't. I think we're going to need one more day for that to cross over. So the only thing I see today is one, Google, we have to see whether that's going to hold the previous day's low. If it does, I will hold it. But it looks like IBB is our only candidate today, and that is because we have that legitimate cross. We have the 5 EMA crossing over the 30 EMA, which is the chart I just showed you, the back test that I showed you. It did reject the 1 ATR channel. It has the 1, and it is underneath the 200. So I will be buying IBB today at the end of the day with the 5 EMA crossing over the 30 EMA, and that looks like it's about the only position that I'm going to take. So let me get these things queued up here. I do have to watch Google kind of carefully though. So let me put in my orders. It's a half position. IBB is a wild one, so we'll see what happens. right. Oops. So I think Google's going to be close here. We'll just have to see how we close. And then, man, this is a pain in the butt with all these charts, let me tell you. Square looks good. Did hit one profit target today. So I'm targeting the 50 RSI right up here and the confluence here of this previous high. So this is about my profit target right here. But I am definitely glad it's up 1.5% today on a down day. So this really helped put me in the green there. Barely, but still green. So that's an achievement. All right, so we have to watch Google. Looks okay so far. IBB did not like that first ATR channel. Thursday, Friday, or today. But as I was mentioning with Etsy, when you get the signal, you need to take it. Because if you start going, should I, shouldn't I, then, then you're guessing all the time at your signals. But this is a legitimate signal. So did have a V1 too. Here's day one, here's day two. Day two washed out day one, closing above. It's a 5560 RSI, so it's not that extended. What do we have? 3 minutes. Okay, so I'm gonna go ahead and buy IBB right now because I know I'm buying
Order
that.
partially filled.
105.18.
Order filled. Order partially filled.
All right.
Order filled.
$105.18 is our new entry. All right. Again, this is a half position because it's under the 200-day, and we did reject that one ATR channel. So, all right. Now we have to watch Google. I'll get this queued up here in case we have to dump it. And we will be buying the SPY today as well. All right, so we have 1 minute. And then after the market closes, like I said, guys, if you guys have any questions, please just type them into the chat and I will be happy to answer them and take a look at your comments. So let's see how we close here. Looks like Google's looking okay. Looks okay, looks okay.
Order filled.
All right.
Order cancelled.
And then we bought SPY at 316 cents for our overnight trade. So that was a loss on the overnight trade from Friday to today, 300.16. Bam. All right, so not too bad today, thanks to Square. Square was the savior that gave us a little bit of profit today. So thank you, Square. So, all right. Sorry, I've been jabbing and jabbing and jabbing the whole way there, but there was just a lot to do. But so let's go through comments and questions. But before I get to that, let me just quickly put in my daily plug. I hope it's okay. I just want to remind everybody that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I love to teach. I've had great success with my clients. I offer a 10-hour course. It's 5 2-hour one-on-one live Skype sessions with me. I'll take you through, teach you everything I know, and just so you know how it works, it generally starts just with a free Skype call or phone call. Doesn't mean you have to take the course, but if you're interested, you want to kick the tires a little bit, but I do like to have about a 30-40 minute conversation with a potential client, see how they got into trading, why they got into trading, what their challenges are, what their goals are, and then I'll put together a customized lesson plan to hopefully help you achieve those goals. And you hear me talk a lot about you got to get a plan, you got to stick to your plan. And I've been thinking about this a lot. And I think what most beginners traders, I think one of the issues they have is that they want to have a plan, but they don't really have a plan. A plan isn't just by, your setups. I think a lot of people think that's what it is, but a comprehensive plan, yes, are the setups, where you get in, but they're also, where you get out, how much position sizing you're taking, what's your correlation. So, through the one-on-one Skype calls with me, that's what I will really help you put together, is a comprehensive plan so that you will know you're following it correctly when you're done. And one of the benefits of doing the one-on-one through Skype is that I teach and then I have you teach it back to me. And if you can't teach it back to me, then I know you don't know it yet. So we keep going until you can teach it back to me. So I think you'll enjoy it. Like I said, I have had really good success with my clients. And if you're interested, the 10-hour course fee is in the description of this video, and then my email is there as well. So if you're interested in doing a 30-minute, 40-minute free phone call with me, just kind of get to know each other a little bit better, please just reach out to me via my email or on Twitter. So, and then lastly, if you like this channel, please do me a favor, hit the thumbs up button. It does help YouTube promote the channel, and I do get a lot of feedback from listeners and viewers saying thanks for the channel, it's making a difference, and I'm really glad to hear that, because that's why I started the channel. So if you could hit the thumbs up button, it helps Google get the channel out to more people, and hopefully to help more people. So if you just hit that little thumbs up button, I would certainly appreciate it. All right. Oh man, I'm always glad when the market's closed and I'm done. All right, so let's take a look. Then I can relax a little bit. Okay. Murat said it is back under 30, back over 30 in one session. Yes, that is correct, Murat, on Q. It doesn't have to be in one session. It can be Thursday, it goes under 30, closes at 29. Friday, it closes back over. That's totally valid. Or if it goes under 30 intraday on Thursday and then closes back over 30 on Thursday, that is also a valid entry. Frederick says, bad day today, just crashed my car. Oh no. I need to find a good stock setup trade to help me buy a new car. Oh, Frederick, sorry, buddy. I'm so sorry to hear that. I hope you're okay. Ah, man. Dang it. Well, let's hope we can find a good stock setup for you. Dang it. Ramble says, hope you're okay. Yes, absolutely. Murat says, Frederick, you should read the Jesse Livermore. He nicely described how we should not try to get things paid by the market. Yes, you're right, Murat. So don't think about the new car and the stock market together. Very good point, Murat. When you start thinking to yourself, all right, I want to go on a vacation. It's going to cost $5,000 and I get that $5,000 out of the market. It doesn't work. You're totally right, Murat. So take Murat's advice, Frederick. Don't think about you have to find something to pay for something. The only way, I'm telling you, the only way to make money through this market is just extract a little here, extract a little there, go with the flow, let it come to you as it's going to come, but you can't force it. So good point, Murat. Thank you. Okay, no injuries. Good. Murat says, I'm going to go back to a used car around 4,000 euro. Mara, Dino, Diego, broker. Frederick, low price commission. Steve Burns, yeah, Etsy shook us out one day too early. I didn't like the range it was stuck in and didn't take it either. I know. When I listened to you last night, Steve, talk about it, I was like, it's exactly how I felt. I felt a little disappointed in myself that I didn't take it because it was a valid position, and I've been burned on it a couple times. And so I guess it's a good teaching, it's a good teaching point that you really don't know what any trade's going to do. So if you have the valid trade, just take it. ERX is 1 penny away from one of my crossovers on Friday. I saw that. Steve was going to take the crossover on ERX. I can't remember what it was, the 510, 550, I think, or the 520. I can't remember now. But it was 1 penny away. Otherwise, Steve would have been in that monster move. But that's how it goes, right? Hey, Mount Doji, good to see you, buddy. Nice to see you. Hope you're doing well. Thanks for coming. Mount Doji, AMD, and Etsy both caught my eye heading into the end of the day. So, Etsy had a V1 there today. It closed above the 1 ATR channel. That in itself is positive, but it's just a little too high for me to buy here. And then you have the, not quite sure what moving average this is with this chart. Oh yeah, you have the 50 downward sloping moving average coming down at you, which I don't like so much there. And AMD. Well, the one thing I can say about AMD is it's certainly consolidating. It's certainly moving sideways. You've heard me say this before, but when you get this long sidewards motion, this is going to break out one way or the other, and it's probably going to break out pretty strong. Problem is we just don't know what direction it's going to be, whether it's going to be up or down, or when it's going to happen. So don't know when that's going to happen. Either of those are going to happen, but I do know it's going to happen. So, if we see some kind of strong move on volume that takes out a range, something like that, that might be our key. But me personally, I wouldn't do anything with this today. Hey, Marco, good to see you. Thank you for coming by, and thank you for saying hi. Mert says, as Mike Douglas says, one has to think about probabilities and see that the outcome is independent of each other, like coin flipping. The probability is even 1/2, even though you throw 1 million in a row. That is true. Absolutely true. Murat says, yes, I actually have an account at Giro, but never traded. I moved some money there. It was supposed to be tradable as soon as I moved it, but it took 2 days to get there. Then I moved back. Frederick says, okay, Murat, not so good. So Frederick says 30 people watching. Oh, I didn't even notice that. That's awesome. That is awesome. I remember when we had 3 people, 4 people, 5 people, 10 people. That was a big day. That was a big day. So yes, I'm very grateful that the channel's growing, and I'm really hoping it's helping people. So thank you everybody for coming by. Steve says, I'm glad I locked in my DDM, Goldman Sachs, SSO, and UWM profits last week. I know. Steve brings up a good point. When the market's going up and things are looking good, headlines are good, you want to keep the trade, right? But, as Steve knows, he's been trading for so long. I mean, you have to look at different levels, right? And if things stop going up and they start going down, or if they go up and then reject that and come back down, that's, a good place to take profits. And that's why with the third ATR channels, guys, I mean, over and over and over and over again, when you get up near these third ATR channels, it's generally a good time to sell. And down when you're down at the negative third ATR channels, it's definitely a good time to buy. But it feels bad to buy here and it feels bad to sell up here. But when you look back on it, big picture, it's generally the right move. I'd like to hear your thoughts on CGC and ABEV. All right. I have not looked at CGC for a long time, so this is kind of fun. So we had that big down move. We had a little bit of a rally, just moving sidewards here. Today it looks like we did trigger this fractal. Here's a fractal, two lower highs to the left, two lower highs to the right. Under 50 RSI. I think it looks more bullish than bearish, but for me personally, Mount Doji, I don't really have a legitimate signal to buy it. But it definitely looks more bullish. I mean, MACD's positive. We're over these major moving averages. We have this downward sloping 50 that might act as some kind of resistance, but just kind of neutral there. I'd rather be long than short if I had to be one or the other, but really no legitimate signal for me there today. Oops. Well, we did poke our head. This is on ABEV. We did poke our head above the value zone. We came back into the value zone. We technically had a V1 today. Today did wash out Friday's low and close back above Friday's close in the value zone. That's good. It didn't move sideways a lot, and the day one bar is larger than one ATR channel. I mean, again, I'd rather be long this than short this, but it's kind of a subpar setup in my opinion, Mount Doji, but it doesn't look bad. Frederick says, Greg, in a downturn bear market, in which sectors are you more focused on to trade, if any? Well, it's a good question. I mean, look, when you're in a down market, you're not going to be having crossovers. I'm going to look for deep dips. I'm going to look for closes under 200, back over 200, or a close under the 30 RSI, back over the 30 RSI, and probably play it back to the 50 RSI. I'm not saying that it's a bottom of all bottoms and we're going to new highs, but in a down market, those are legitimate trades that you can take, but they're, in my opinion, they're shorter horizon trades. You're playing for a 30 RSI back up to a 50 RSI. Conversely, you might be looking for long trades on bonds and gold, right? Because, if we have a down market, it's very possible that bonds and golds might be going up market. So I may concentrate on long positions there on the defensive type of instruments like bonds and gold. But, in a down market, as far as our watch list goes and in the equities that we follow, I would be looking for deep dip buys and looking for some kind of bounce plays. Hey, John, good to see you. Thank you for coming by. Thoughts on BUD, CVS, BBC, and NCR? All right. Well, here's Bud. All right. So, we closed outside of the 1 ATR channel. We're coming back into the value zone. So, that's checklist number one. We're back into the value zone. Requirement number two is we move sideways for at least a couple days. Requirement number three is we have a stab down and a reversal. So, this is kind of shaping up, but I would need going forward here. I would need a valid V1 or V2, a spike down, close back up to get me, right in here would be perfect, because here you have this whole bands of moving averages. So, ideally another day down here, some kind of sidewards movement, an attempt to go down, reverse back up, So that is how I would play Bud. CVS, like so many others, we've moved up strongly. Just tag the third ATR channel. Same with Bud on CVS, John. I'd like to see this move back down into the value zone, stop going down, move sidewards, attempt to go down and reverse back up with the V1, V2. These are all return to value type of trades. We got extended, should move back into value, and then we look for a move up out of value, hopefully to go back up and be extended again. BCC. Boise Cascade. Same. We made a higher high. We're coming back into the value zone. We are in the value zone, but again, I don't want to see another big bar down because that's showing distribution coming in. I need to see some stabilization now that we're in the value zone so that I know that it's not just the sellers are in control, that there's some buyers going on. So a couple more days sideways, V1, V2 entry. Same situation. And NCR. Exactly the same, John. Moved up, got extended. We need to come back into value zone, move sideways, look for a V1 or a V2 to trigger us back up into a trade. Haroon, hey, good to see you. Hi, thanks for your advice on ZM on Friday. Oh, what's going on with ZM? These new charts, man, I'm telling you. Oh yeah, okay, I remember. I think what I said on ZM was I would probably stay in this as long as it held the 30 RSI. I think the day we talked about it, well, I think it was like a 32. Oh yeah, right here, 32.36 RSI. It is catching support. There were some buyers that came in at the 30 RSI. So, just kind of big picture here. If you really wanted to stay in this stock, probably it's okay to stay in this. I mean, if it were me, I would stay in this as long as it's above 30. But if it dropped below 30, I would just go, okay, that's the signal I have to get out. Conversely, if we came up here, got to a 50 RSI and it stayed above the 50 RSI, I'd keep it as long as it kept going up and didn't turn around. But if tomorrow it got up to the 50 RSI and then closed back below it, that would be my exit. So that's how I would approach ZM, Haroon. What, with all the oil things happening, are you tempted to buy stock who are in the oil sector? Well, so, here is XLE. This is the ETF of the oil sector. So this is a bunch of different companies in the oil sector. And Chevron, Exxon, so forth and so on. And I went over this one earlier, but I mean, look, we closed above the 200-day. You could go ahead and buy this here at the 200-day and just hold it as long as it stays above the 200-day. If it closes below, it does give a good risk to reward ratio, but as far as the context of this chart, it's just too high for me. We're right at the third ATR channel. I don't like to buy regardless of how good the trigger is when it's this high ATR channel wise. So no, I'm not really tempted to buy anything here on XLE because of this reason, but I gotta say, even if you did buy it here at above the 200 to close back below the 200, it would give a good risk to reward ratio. But we're to 69.77 RSI. We did hit the 70 RSI and close back below. So if I was in the position, that's exactly where I'd be getting out. So I wouldn't be getting into something today where if I had a regular trade on this, I'd be getting out today. So Who knows? I mean, with that oil strike, they may have production up in 3, 5 days, and we might see it come back down. But to answer your question, no, I'm not. I'm not tempted to buy anything up here because it's just too high. JT says your thoughts on CMG. Chipotle. Huh, okay. So this is a little bit different type of setup compared to the most that we had. So we had this big, huge down bar. Don't like that bar at all. We did rally. Notice we rallied to about halfway of the bar. Down, rallied to about halfway of the bar before it came back down. Now, I don't like that we're still in the range of this big bar. That concerns me. If you really wanted to get into Chipotle, you could have bought this here at the end of the day and use a close back below the 50-day as your stop. I don't think the setup's all that great. There's no V1, V2 or anything like that, but at the very least, it gives you a good risk to reward. If you're right and it keeps going, great. If you're wrong, your loss is probably pretty small with the close anywhere, even a penny below the 50-day moving average. So if the risk to reward is good, the setup in general is not so great, but I've seen worse. Frederick says, yep, stick to your plan. That's right, bud. See, that's just part of my habit that I was talking about earlier. It doesn't even enter my mind to do that, Frederick. I'm very careful not to get swayed by anything that's going on CNBC or the financial media or the news. I literally look at that stuff as like probably do the opposite. But I don't do the opposite, but that's how I look at. But you're right. Stick to your plan. Mount Doji says, I have seen a lot of setups similar to TSN. Wanted to hear your thoughts. Is it similar to CMG? I have seen a lot of similar setups to TSN. Want to hear your thoughts. Okay, well, my thoughts on TSN are, we closed above the 50. That is definitely the 50 RSI. That is definitely good. Also closed above the 50 RSI. That is good. So closed above the 50 RSI, closed above the 50-day moving average. Looks like it very close to closing. Looks like it did close above the 20 also. MACD is still negative. We are right in the value zone. It's not bad. It's range bound from this previous range down here. I mean, I don't think I would buy this. Like, this would not jump off the page at me to buy, but there are some positive things. I mean, we've closed over all the moving averages. We've closed above the 50 RSI. We've closed above the 50 SMA. So not bad. And the risk to reward's pretty decent. The reward could be up to here, and the risk is probably down to here, but it's okay. But I don't think, I wouldn't buy this. It didn't jump out at me, but looks decent. CMG. Oh, yeah, we just looked at that one. So yeah, they're battling around the 50 SMA. Yeah, similar. Frederick says you are bulletproof to the news. I try to be, but still, news is going to have an effect. It will have an effect on you. Honestly, I don't even like to look at the financial news for that very reason. I don't want it to trigger something in my mind or something where I'm like, oh, this chart looks okay, but I did read that article about it. I try to be bulletproof, but you're still susceptible to it. I've read many books and heard from many a famous trader that they do not even turn the news on or read any financial information whatsoever. Seems hard to believe, but it is true. Haroon says, your thoughts on SEDG? SEDG. Well, we're range bound, right? We're range bound from this bar, the high here, the low here. We're still inside of that. We did move above the moving averages today. We are above a 50 RSI. That is positive, but now you have this confluence of the 1 ATR channel and that previous high pretty close in there. It may continue up. I mean, it was up nicely today. It probably will have some issues here. If I was dying to get into SEDG, I would have to have it take out this fractal. Here's a high with two lower highs to the left, two lower highs to the right. So, I mean, if I really wanted to get in this, I would wait for it to move above the high of this bar, because this is a fractal bar. Here's a high, two lower highs to the left, two lower highs to the right. But on the opposite side, then you're going to run into this resistance. So I don't think there's a clear cut signal here. But again, if you were just dying to get into this, it'd have to close over this fractal bar here. And then, what would you use as your stop? Probably, the 50 RSI and the 20-day EMA, a close below that as your stop. I hope that helps, Haroon. Frederick says, so the TV shows on stocks are only for entertainment. If you want my honest opinion, they are there to manipulate retail traders to sell their stocks at very low prices to the smart money, and I believe they are there to get people pumped up about buying stocks at high levels, getting retail buyers to buy stocks at high levels from the smart money that's selling it to them. That is my honest opinion on stock shows. So be careful. All right, everybody. So listen, last chance for questions. Otherwise, I'm going to get out of here, go for a hike, have a lesson with Anthony tonight. So I'm looking forward to that, Anthony. I don't know if you're still on, but I'm looking forward to that. And we'll keep our forward momentum going. So, like I said, last chance for questions. Just let me know if you have any. And again, I apologize with the chart situation. It's been a big pain. It's been a big pain for me too. I'm so used to my charts, but they're having issues for some reason with their data feed. So I really hope they get this taken care of, because it is difficult to trade from charts that you're not used to. So I guess it's a learning situation. Make sure you have some backup charts in case something like this happens. Frederick says, ha, I see, like DiCaprio movie. Murat, how many kilometers or miles are you walking every day? I usually walk for about 2 hours up in the mountains, Murat. I'm not exactly sure how many miles it is. I've never really measured it. Sometimes I take different routes, but I take 2 walks actually. I walk the first walk by myself because it's really hilly, and my dog Katie, she's older. So I do the first walk by myself. I spend a lot of time thinking about the market, what I did that day. Did I do everything right? Do I have any buyer's remorse or selling remorse? My goal every day, and I think about this on my hike, is, okay, did I do anything I wasn't supposed to do? Do I have any remorse for buying something? Do I have any remorse for selling something? And my goal every day is to take that walk and go, no, I did what I was supposed to do. And I would suggest the same for you guys too. Then I come home, then I take my old dog Katie, and we go on a kind of a nice little gentle walk. and that's about the plan. So it's about 2 hours every day, but I don't know how long. Anthony says, oh, Haroon says, thank you. You're welcome. I hope that helps, Haroon. Anthony says, I am here. Looking forward to it as well. Me too. iPhone counts the steps. Oh, yeah. Yeah. I guess I should. I guess I should do that. I walk really slow. I would imagine it's probably 5 miles. I imagine. Hey, really good point, Murat, bringing up, when you were talking to Frederick about, I want to buy a car, I want to buy this or buy that, and I'll have the market make me the money. 100%. I'm glad you brought that up, because you cannot think like that. You have to take what the market gives you, when it gives you. You can't force it. You can't force it. If you said, okay, I need $5,000, I want to go on a cruise, and I need to make it by the end of this month, not going to happen. I just know it. It's not going to happen. It never does. It never does. The market's going to give it to you when it wants to, at its own time. Frederick says, thanks, Eric, for all the time you give to us. Have a good hike. You are certainly welcome. And thank you so much, everybody coming by. Frederick, my friend, I hope you're okay. I'm really sorry about your car, man. Hope your day gets better, but thank you for coming by. Murat, thank you for all the good input, and appreciate that, what you just mentioned about the market, having a goal for the market, trying to buy something. That was really great. Anthony, thank you, my friend. Hope, and I will see you tonight. Haroon, thank you for coming by. I hope that helped. JT, thank you, sir. Good to see you as always. Good job on opening that Schwab account. Mount Doji, good seeing you. Hope you're doing well. Hope you had a good weekend. John, really good seeing you. I hope that helped on those 4 stocks, but those are pretty much, return to value stocks. So we'll be looking for those. Steve Burns, thank you, my friend. Always an honor to have you here. I know everyone's stoked when you're here as well. And good job at managing all those trades and getting out of all those positions last week. You are the master, my friend. Thank you. Oh, 550. Okay, you were talking about the 550 EMA cross on the XRE, I believe. And then Marco, good to see you, my friend. And thank you for coming by. And let's see. Ramble Ron, good to see you. You know what, Ramble Ron? I had someone contact me. They wanted to do a 30-minute Skype call with me. And his name was Ron. And he reached out to me. I was like, oh, Ramble Ron, I'm going to be able to meet Ramble Ron face to face on Skype. And he got on and he said, hey, yeah, I've been here for a couple days, but I had it in my mind that it was you. I was like, you've been there for longer than a couple days. And he's like, no, I haven't. Finally, I figured it out. Wasn't you. So it was a good call. He and I had a good call, but I was kind of excited. I said, I'm going to be able to see Ramble, but it was a different Ron. But thanks for coming by, Ramble. Let's see, did I leave anybody? Roy B, thank you for coming by. You're hiding up here at the top. So if you have any questions in the future, please let me know. And Workhorse, that's right. Hey guys, you guys want to check out Workhorse Fitness and Training on YouTube. He does fitness training. He's down in Texas. And so I appreciate you coming by, my friend. If I can ever help you with anything, please let me know. So all right, everybody, that's it. I'm going to get out of here, and hope you have a good rest of the day. Go out and do something nice for somebody today. And again, as always, thank you for coming by. I appreciate you investing your time with me, and I hope it's helping. So God willing, I will be here tomorrow during the last hour of the market, and I hope to see you here as well. Take care, everybody. Have a good day. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision.
Market data connection.
This video or
reestablished.
live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.